All right, so market's doing pretty much what I thought they would. You've got this kind of intersection of seasonality, which the big investors are well aware of, right? And then you've got this surge of enthusiasm that the retail traders are trying to jump on the bandwagon. These are like all the chasers start to come in and go, oh yeah, rate cuts got lower and the economy's great and all of that. So you've got the retail chasers that are kind of just jumping into this thing. You do have some hedge funds and institutions that are buying out of the money calls on Apple and NVIDIA. I'll show you the options chain in a minute to show you what I mean. And that's pumping it further, but I think it's just a matter of time before they start to dump and the retail crowd gets trapped, because the retailers are not only buying options, the retail crowd's buying stock. They're being told to buy stock. The economy is great and buy some more of it. And so they buy stock and they buy options. Different people buy different things. And then when the institutions start to dump, or the low amount of volume eventually catches up with the options market, where there's just not a lot of out of the money push, so the market maker has no need to push higher, then the market maker is going to want to go to cash. So they start dumping the stock. Why in the world would the market maker hold on to stock if there's no fear of any of the out of the money calls getting in the money? Now, for those of you that don't understand this, something that we've been talking about for years here, so if you're new, you might not understand it. So the simple explanation of it is that if you take Apple, for instance, Apple's currently trading at 255 and change. So for Friday, there was an abundance of 260 calls. 259, I don't know if there are 59, 58, I don't know if they're trading five wides or whatever. But let's just say there's abundance of 260 calls, like tons of them. If for some reason that has nothing to do with the options market, Apple gets an upgrade or analyst or whatever it is, and Apple pops to 262, these out of the money options that were bought over the last, whatever it is, week, 2, 3, 4, 5, 6, are now all of a sudden in the money. When out of the money calls become in the money, it puts the market maker in a position where they may need to deliver on Friday the stock at 260. That's what a 260 option is, right? If you bought the 260 call today and price was at 262, 264, 268, you could exercise the option. That is your right. That is what an option is. Now, we don't do a lot of that. We flip the contract before the expiration and we make money on the options contract. But there are many investors that will take possession of the stock at 260. Who wouldn't want to own Apple at 260 if price was close to 270 and going higher? So then the question becomes, all right, well, what if all those investors decide, yeah, we want the stock? Who's going to give it to them? Apple? There needs to be a clearinghouse. There needs to be some, liquidity in the market that allows for these transactions to take place in a heartbeat. I want, if I have 10,000 calls, give me my 1 million shares at 260. Hold on a second. Let's go find them. No, I want them right now. And so the market maker is not going to, let's say prices at 268 on Friday. The market maker isn't going to buy them at 268 to then deliver them to this dude at 260. No, no, no. The market maker is going to buy it now when price is at 255. Because then if he has to flip them at 260, makes money. Maybe he'll buy him at 256. Maybe he'll buy him at 257. Maybe he won't buy him at all, depending on what the market is doing, the average true range, how many calls are being opened and closed. But the idea is that the more out of the money, let's just say this is 261, 262, the more out of the money calls that are bought, if it's bought in huge volumes, the market maker has no choice but to buy big blocks of that stock. And those buys by the market maker is what pushes the stock price higher. It is not directly the buying of an option that makes the price go higher. The reason why the acting closed out, because they don't think price is going to get up to 260, so they start closing out their calls and maybe even switching over to puts. Then the market maker will sell blocks of stock. That is what causes the market to go down, triggering stop losses and all kinds of different things that can potentially happen. So this is what the market maker does all day long. So when you see these huge moves up like this in Apple, that is not the average investor buying. That's not you and me buying. That's not mom and pops buying, 100 shares of Apple for their 401k or for their IRA, whatever it is, right? No, 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 no. These are out of the money calls that were bought, and the market maker is squeezed. This is a market maker squeeze. This is mechanical buying. This isn't, oh, well, the new iPhone's coming out, new watch is coming out. Fuck that. That is not what moves the stock. What moves the stock is squoozing, is when the market gets squeezed and there's tremendous buying of the stock. What can cause tremendous buying of the stock? Earnings, analysts, market maker squeeze. Sometimes it's the short squeeze of the investor that got stuck, so they have to buy back their shorts, but there's not a lot of people shorting it at this point, so it would not be that. So what you have going on in the market is this, as I mentioned the other day, duality, where you've got the FOMO chasers. That's what I like to call them. You have the FOMO chasers that didn't take advantage of the big run up in the market, but they want to get a piece of it now. And now that they've heard that the Fed is lowering interest rates and everything is wonderful, yay, let's buy some stocks. So now the FOMO chasers are getting in. But we have seasonality, we have September, rate cuts done, it's priced in. All right, maybe we'll get another one, maybe we won't, whatever. Let's just see. But the seasonality of September and the rebalancing and all this move that's been made, it's now time for the big boys to cash in. And so they're going to start taking profits. Yeah, well, if they sell, who are they selling it to? Who are the big boys selling when they get rid of the stock and such? Not all of it, but big chunks of it. They're selling it to the people that are chasing. And so these people get trapped. What does that mean? It means they end up with options they can't get rid of without losing most of it. They'll expire worthless. They've got stock that they thought was going to be worth a lot because they bought it here, and now Apple is dropping and they can't get rid of the stock quick enough. What are they going to do? Have to sell it for $240? That's what happens to the retail chasers. So I have, my opinion about what the market is doing right now, and it looks to me very toppy, very algorithmically bought up. A lot of out of the money stuff, NVIDIA, Apple. We'll take a look at those options chains. And then you're going to slowly start to see the pullback and then the dump. Maybe not. Maybe the out of the money frenzy will continue and you'll just see it go up again. Well, we'll see. For now, I've got a small position on the SPY where I'm shorting it at 665. See it go lower. Right now it's at 665. I've got till Friday for this to dump. Show you some levels of where I think it would need to breach to get there. And then just focus on some individual stocks potentially and see how the market plays out through this week. Typically, if you look at my historical trading in the month of September, it's not very heavy. If the whales and the hedge funds and big investors, if they lightly trade in September, why in the world would I heavily trade in September? Right? Like, doesn't make a lot of sense. September typically has been a good month for us, even though it's one of the worst months overall in the stock market. In fact, it's the worst month historically. I don't trade a tremendous amount in September, more so in October and November. Very difficult months to trade, but we do it.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.